If you own silver right now, you need to hear this. Because what's happening in the precious metals market isn't just another price fluctuation, it's a fundamental shift that's been building for months, and the window to act is closing faster than most people realize. Let me paint you a picture of what's really going on. While mainstream financial media has been focused on stock market volatility and interest rate speculation, something extraordinary has been unfolding in the silver market. The kind of thing that happens maybe once or twice in a generation. And if you're holding silver or thinking about it, the decisions you make in the coming weeks could define your financial security for years to come. Here's what nobody's talking about. Silver just broke through a critical resistance level that it's been testing for months. We're seeing price action that technical analysts have been waiting for since the last major bull run. But this isn't just about charts and trend lines. This is about fundamental supply and demand dynamics that are creating a perfect storm. Think about what silver actually is for a moment. It's not just a precious metal that sits in vaults. It's the most electrically conductive element we have. It's in your phone, your computer, your car. Every solar panel requires silver. Every electric vehicle uses significantly more silver than traditional cars. The green energy transition that governments worldwide are pushing? That's a silver story. And the demand is accelerating at a pace that most people haven't fully grasped. But here's where it gets interesting. While demand is surging, supply is struggling. Major silver mines aren't keeping pace. Production costs have risen dramatically. And here's the kicker. Most silver comes as a byproduct of other mining operations. When copper or zinc or lead production slows down, silver supply contracts. We're seeing that contraction happen right now. Now I want you to think about something. When was the last time you heard a major financial institution talk seriously about silver? They'll discuss gold all day long. Gold this, gold that. But silver? It's like the forgotten stepchild of precious metals. And that's exactly why smart money has been quietly accumulating. Central banks have been on a gold buying spree that's broken records. But what most people miss is what's happening in the silver market at the institutional level. Exchange-traded funds backed by physical silver have seen consistent inflows. Industrial users are securing long-term supply contracts at prices that tell you they expect much higher costs ahead. The commercial positioning on the COMEX has shifted in ways that historically precede major price moves. Let me tell you a story that illustrates what we're dealing with. Back when the Hunt brothers tried to corner the silver market, they understood something fundamental about silver that still holds true today. The available supply of physical silver is actually quite small relative to the paper contracts traded. The ratio of paper silver to physical silver is staggering, and when that imbalance corrects, and it always corrects eventually, the price movements can be explosive. We're not talking about market manipulation here. We're talking about market structure. The COMEX operates on a fractional reserve system for precious metals. Most contracts are settled in cash, not physical delivery. But what happens when more people start demanding physical? What happens when industrial users who actually need the metal start competing with investors who want to hold it? You get a squeeze. And the early signs of that squeeze are already visible if you know where to look. Before we go further, I want to share something with you. I've put together a free guide that breaks down the wealth protection strategies that thousands of American retirees are using right now. It's in the description below. These are the same approaches that helped people preserve their purchasing power during previous periods of monetary instability. If you're concerned about protecting what you've worked your whole life to build, grab that guide. It could be the most valuable thing you read this month. Now, back to what's happening with silver. Let's talk about the elephant in the room, the dollar. The US dollar has been the world's reserve currency for decades, but that status isn't guaranteed forever. We're watching a slow-motion shift in the global monetary system. Countries are settling trade in their own currencies. Central banks are diversifying away from dollar reserves. The BRICS nations are actively working on alternative payment systems. What does this have to do with silver? Everything. Because when confidence in fiat currencies wavers, people look for real assets. Things you can hold, things that have intrinsic value. Gold gets the headlines, but silver has something gold doesn't. It's both a monetary metal and an industrial metal. That dual demand creates a unique dynamic. Think about the last time we saw real monetary instability. Not the brief scares, but the sustained periods where people questioned the value of paper money. Silver didn't just go up, it exploded, and we're seeing the same warning signs now that preceded those moves. Inflation that's proving stickier than central banks predicted, government debt levels that are mathematically unsustainable, geopolitical tensions that are fracturing the post-World War II economic order. Here's something that should concern every silver owner. The ratio between gold and silver prices has been historically out of whack. Throughout most of human history, that ratio has averaged somewhere between 15 to 1 and 30 to 1. Right now, even with recent moves, we're still well above historical norms. What does that tell you? Either gold is overvalued or silver is undervalued. And given the industrial demand picture for silver, which do you think is more likely? Let me walk you through what's happening in the physical market, because this is where theory meets reality. Premiums on physical silver, the amount you pay above the spot price, have been elevated for months. Delivery times from major dealers have stretched out. These aren't signs of a market with abundant supply. These are signs of tightness. And when physical markets get tight while paper markets remain liquid, something eventually has to give. The solar industry alone is projected to consume massive amounts of silver over the next decade. Every major economy has committed to renewable energy targets. Those aren't suggestions. They're mandates backed by legislation and funding. And there's no substitute for silver in solar panels that matches its efficiency and cost-effectiveness. So we're not talking about demand that might materialize. We're talking about demand that's locked in by policy decisions already made. Electric vehicles are another demand driver that's just getting started. The average EV uses significantly more silver than a traditional internal combustion engine vehicle as the automotive industry transitions. And it is transitioning, regardless of political debates. Silver demand from this sector will multiply. We're in the early innings of this trend, not the late stages. But here's what keeps me up at night, and what should concern anyone holding silver. The decision you make now isn't just about price appreciation. It's about what you do with that appreciation when it comes. Because if silver does what the fundamentals suggest it could do, you'll face a choice. Do you sell into fiat currency that's losing purchasing power? Do you rotate into other assets? Do you hold and use it as collateral? These are the questions that separate people who preserve wealth from people who just ride price waves. Let me share something that most financial advisors won't tell you because, frankly, most of them don't understand precious metals beyond surface-level talking points. If you're sitting on retirement accounts worth 6 figures or more, there are ways to position yourself in physical precious metals that offer tax advantages most people never consider. Gold IRAs, for instance, allow you to hold physical metal in a retirement account without triggering tax events. You're not just speculating on price, you're fundamentally restructuring how your wealth is stored. I've put together detailed information on how this works. The mechanics, the custodians, the IRS rules, all of it. It's in the description. And look, this isn't for everyone. But if you're concerned about market instability, currency debasement, or just want a portion of your wealth in something that's existed as money for 5,000 years, it's worth understanding your options. The guide covers everything, and there's no obligation. Just information that could prove valuable given what's unfolding in the broader economy. Now, let's talk about timing, because that's what this really comes down to. Markets don't move in straight lines. Silver especially doesn't move in straight lines. It's volatile. It can test your conviction. But the major moves, when they come, happen faster than most people can react to. By the time silver is making headlines, by the time your neighbor is talking about it, the easy money has already been made. We're at an inflection point. The technical picture is setting up. The fundamental drivers are in place. The macro environment is supportive. But markets can remain irrational longer than you can remain solvent, as the saying goes. So what's a silver owner supposed to do? First, understand what you own and why you own it. If you bought silver as a speculation, as a trade, then you need to have a price target and an exit strategy. But if you bought silver as a wealth preservation tool, as insurance against monetary instability, then short-term price movements are noise. The question isn't whether to sell at a certain price. The question is whether the reasons you bought it in the first place are still valid. And let me tell you, those reasons are more valid now than they've been in years. We're living through a period of unprecedented monetary experimentation. Central banks have expanded their balance sheets to levels that would have been unthinkable a generation ago. Government deficits are structural, not cyclical. The political will to address these imbalances doesn't exist. So what happens next? History gives us clues. Every time a major economy has gone down this path, excessive debt, monetary expansion, loss of fiscal discipline, the outcome has been the same. Currency debasement. Sometimes it's slow and steady. Sometimes it's rapid and chaotic. But it always happens. And when it does, real assets outperform paper assets. It's not a theory. It's a pattern that's repeated across centuries and continents. Silver owners right now are sitting at a crossroads. One path is to treat this as a trading opportunity, take profits, move on, maybe come back later. There's nothing wrong with that approach if it fits your strategy, but the other path is to recognize that we're in the early stages of a much larger shift. A shift in how people think about money, about value, about what constitutes real wealth. The industrial demand story for silver isn't going away. The supply constraints aren't going away. The monetary instability isn't going away. These are long-term trends that will play out over years, not months. And the people who position themselves correctly for these trends, who understand what they own and why they own it, those are the people who will look back on this period as a turning point. Let me give you a framework for thinking about this. Imagine you're holding an asset that has both immediate utility and long-term monetary value. An asset that's required for the technological transition the world is undergoing. An asset that's historically served as money when paper currencies failed. An asset that's currently undervalued relative to its monetary counterpart. That's silver. That's what you own. But ownership without strategy is just hope. And hope isn't a plan. So what's the strategy? It depends on your situation, your timeline, your risk tolerance. But here are some principles that apply regardless of individual circumstances. First, understand the difference between price and value. Price is what you pay. Value is what you get. Silver's price fluctuates daily based on trading activity, sentiment, technical factors. But silver's value, its utility, its monetary properties, its role in the global economy, that's more stable. When price and value diverge significantly, opportunities emerge. Second, think in terms of purchasing power, not nominal prices. A silver coin that's worth more in dollar terms but buys the same amount of goods hasn't actually gained value. It's maintained value while the currency depreciated. This distinction matters because it changes how you evaluate performance and make decisions. Third, consider your time horizon. If you need liquidity in the next few months, your decisions should be different than if you're thinking about wealth preservation over years or decades. Silver can be volatile in the short term, but over longer periods, it's preserved purchasing power through every monetary crisis in modern history. The decision facing silver owners isn't really about silver at all. It's about how you view the future of money, of economic stability, of the systems we've built our financial lives around. If you believe those systems are sound, that central banks have everything under control, that debt doesn't matter, then maybe silver isn't for you. But if you have doubts, if you see the same warning signs that are keeping institutional investors up at night, then silver isn't just an investment, it's insurance. And here's the thing about insurance. You don't buy it after the house is on fire. You buy it when things seem fine, when the risk feels distant, when everyone else thinks you're being paranoid. That's when insurance is cheap and available. Once the crisis hits, once everyone wants protection, the cost skyrockets and availability disappears. We're seeing this play out in real time in the precious metals market. Physical premiums are elevated. Delivery times are extended. These are early warning signs. Not panic signals, but indications that the market is tighter than the paper price suggests. Smart money pays attention to these signals. Smart money acts before the crowd. Now, I want to address something that's probably on your mind. What about the downside? What if silver doesn't perform? What if the monetary system muddles through? What if industrial demand disappoints? These are valid questions, and anyone who tells you there's no risk is lying to you. Here's the reality. Silver could consolidate. It could pull back. Markets don't move in straight lines, and corrections are healthy and normal. But the fundamental case for silver doesn't rest on a single catalyst or a specific timeline. It rests on multiple converging trends that are already in motion. Even if one or two of those trends disappoint, the others provide support. The solar industry could slow down, but electric vehicles are accelerating. Industrial demand could soften, but monetary demand could strengthen. The dollar could remain strong, but that just makes silver cheaper for buyers in other currencies. The beauty of silver's dual nature, monetary and industrial, is that it has multiple demand drivers. You're not betting on a single outcome. You're positioned for multiple scenarios. Let me tell you what I think is really happening here, beyond the charts and the supply-demand analysis. We're witnessing a generational transfer of wealth, not from one group of people to another, but from one form of wealth to another. From paper assets to real assets, from financial engineering to tangible value, from complexity to simplicity. This transfer doesn't happen overnight. It happens gradually, then suddenly. We're in the gradual phase now. The signs are there for those paying attention. Elevated inflation that won't go away. Central banks trapped between fighting inflation and supporting markets. Governments unable to reduce deficits. Geopolitical fragmentation. These aren't temporary disruptions. These are structural changes. And in this environment, silver isn't just a commodity or a speculation. It's a position in real assets during a period when the value of paper assets is being questioned. It's a hedge against the very real possibility that the monetary system we've known for decades is evolving into something different. For those of you who've watched this entire video, who've stuck with me through this analysis, I want to offer you something additional. That free guide I mentioned earlier? If you're an American retiree with at least $100,000 in any retirement account and you mention you watched this video, you'll get access to an exclusive one-on-one educational web conference. No obligation, no sales pitch. Just a detailed walkthrough of how to position your retirement assets for what's coming. The link is in the description, and this offer is only available to people who watch through to the end. So here's where we are. Silver owners are facing a decision. Not necessarily a decision to buy or sell, but a decision about how to think about what they own. Is it a trade or a position? Is it speculation or insurance? Is it a bet on price or a hedge against instability? The answer to those questions determines everything else. It determines whether you panic during corrections or see them as opportunities. It determines whether you sell into strength or hold for the bigger move. It determines whether you're playing a short-term game or positioning for a long-term shift. What I can tell you with confidence is this: the fundamentals supporting silver are stronger now than they've been in years. The supply-demand picture is tightening. The monetary backdrop is supportive. The industrial demand is accelerating. The technical setup is constructive. All the pieces are in place. But timing markets is impossible. No one can tell you exactly when the next major move will happen. What we can do is position ourselves so that when it does happen, we're ready. We're not scrambling to get in. We're not paying elevated premiums in a panic. We're already there, holding real assets, waiting patiently for the market to recognize what we already know. Your time isn't up, but your window to act thoughtfully, strategically, without pressure, that window is narrowing. Not because of artificial urgency or manufactured scarcity, but because the market is evolving. The easy accumulation phase, where you could buy physical silver at reasonable premiums with quick delivery, that's ending. We're moving into a phase where physical becomes harder to source, where premiums expand, where the gap between paper and physical widens. This is your decision day, not because you have to do something immediately, but because the conditions that allow for calm, rational decision-making won't last forever. Markets have a way of forcing decisions on people who wait too long. And forced decisions made under pressure, those are rarely optimal. So take a moment, look at what you own, understand why you own it, decide if those reasons still hold. And if they do, if the case for silver is as compelling to you as it is to me, then you already know what to do. Not panic, not rush, but act with purpose and conviction. The silver market is telling us something. The question is whether we're listening, whether we're paying attention to the signals that matter rather than the noise that distracts, whether we're thinking strategically about wealth preservation in an era of monetary uncertainty. Your time as a silver owner isn't up. It's just beginning. But how this chapter unfolds, what decisions you make, how you position yourself for what's coming, that's entirely up to you. The information is available. The opportunities exist. The only question is whether you'll act on them.